Okay, everybody, I think that we'll go ahead and get started with our webinar this evening. And there might be some people that keep joining us, and we'll certainly welcome them when they come. So good evening, and thank you for joining us. I am Lauren McLean, and I'm the Business Development Specialist for the Illinois Wealth Management team at Trust Bank. I have been passionate about advocating for people with disabilities for many years. And while my first career afforded me the opportunity to work with individuals with different needs, even after changing careers, that passion was still burning inside of me. So interestingly, I later had my own child with a developmental disability, and that is how I was introduced to Illinois ABLE. I know how important these accounts are, and I know the importance of having a solid financial plan in place. So that is why Trust Bank is excited to offer this webinar this evening. Our agenda tonight is pretty simple. Chelsea Rude, Vice President and Manager of Illinois Wealth Management with Trust Bank, will start the evening off talking a little bit about our team and the role that we play in financial planning. Then we are super excited to have JJ Hanley, the Director of Illinois ABLE, with us this evening too. I met JJ shortly after joining the Trust Bank team and knew she was someone that I needed in my corner. She has been a terrific resource for me personally, but also for our customers that we've had specific questions regarding their assets and services. We really think you all will enjoy JJ and what she has to teach us. I will then be wrapping up the evening with a personal testimony from our family regarding Illinois ABLE. Just a few housekeeping items. We will keep all microphones muted during the presentation except for the presenters. We want to make sure that everyone is able to hear the information being presented. If you are having technical difficulties, you can email us at wealthmanagement@trustbank.net or send us a message in the chat feature on this side. We hope to have time to answer questions, and we spoke to JJ earlier. She is all about answering specific questions from you all. So it's probably easiest for us to address those using the chat feature. Chelsea and myself will keep a really good eye on those, and we'll make sure and let JJ know when questions come up so that she can answer them during the presentation when it's relevant. I cannot say it enough, but thank you. We truly appreciate you joining us this evening. We hope that you find this information valuable. Now I will pass it over to Chelsea.
Thank you, Lauren. So good evening, everyone. My name is Chelsea Rude, and like Lauren said, I serve as the Illinois Trust and Wealth Management Market Manager for Trust Bank. And we want to just thank you for attending this evening. We hope that you find the information valuable. The team at Trust Bank is very excited to partner with Illinois ABLE this evening to provide you information on some of the tools that they have available. Our team gets the opportunity to work very closely with families all across the country that have loved ones that they're planning for. So we understand the importance of setting aside assets in a way that doesn't negatively impact the services and benefits that they receive. And we get to work alongside other professionals outside of our team, such as the attorney and CPA of the family's choice, to ensure that all aspects of the plan are reviewed and carried out in the best way possible. And we have found that many of our clients benefit from the Illinois ABLE accounts. And so I am very happy to introduce our guest speaker, JJ Hanley, the Director of Illinois ABLE.
Thanks so much, Chelsea, and thanks so much, Lauren. I will jump right in, discussion-based as much as we can. I understand that the group that's listening in tonight is a mix of folks, including some who are with service providers, but I'm going to keep this in a basic information level, and then you can go ahead and ask questions, and I'll do my best to answer them. Just for starters, these three young adults that you see in the photo are real people who live in Illinois, who are Illinois ABLE account owners. They are the real faces of this real game-changing program or plan that I believe in, both as a professional, but more importantly, as a parent of a young adult who has autism spectrum disorder. It's really been my personal and professional mission to ensure that people with disabilities take their place in society, and doing so really hinges on the ability to have some economic power. And Illinois ABLE, for the very first time, makes that possible for most people with disabilities. Next slide. Quickly, we're going to talk about what is ABLE, the basics, talk a little bit about Illinois' role across the country in ABLE, give you some information about how you can keep updated on ABLE, and then we'll set aside time for questions, your questions, throughout, but also at the end. Next slide. This is Nevitt. He is an Illinois ABLE account owner, and it's just great to see his face in our presentation. Next slide. Okay, history, quickly, 2014. The Federal ABLE Act passed. It had amended the Internal Revenue Code. You don't see any mention of the Social Security Administration or Medicaid in this legislation. And why is that? Because this falls on the side of the Treasury Department and the IRS, and provides people with disabilities and their families a way to pay for the expenses that come with living with a disability without impacting their benefits. So ABLE, the actual IRC, the code for it is 529A. Many of you are familiar with 529 college savings. 529A falls right underneath that as 529A. We passed our legislation here in Illinois in 2015, and launched our plan in 2017. And that slide needs to be updated. There were 42 states. There are now 43 states, plus Washington, D.C., who offer and administer ABLE plans. Illinois is one of them. Next slide. What is it? Achieving a better life experience. ABLE accounts are, simply put, financial accounts, privately held, that eligible people with disabilities can own, and it's the person with the disability who owns it, and preserve federal benefits, SSI, SSDI, Medicaid, HUD. You use them to build, and this is what this is all about, your financial independence, to be able to have greater self-reliance, improve quality of life, and really plan for a bright future. Next slide. I like to remind myself and anybody who's thinking about ABLE or within or without the disability community about the Americans with Disabilities Act and the role that it plays when we think about ABLE accounts. There is a part of the Act that talks about assuring people with disabilities the same equality of opportunity, full participation, independent living, and economic self-sufficiency that everyone has and has had. That is really core to the ADA, which was passed 30 years ago. But in the 30 years since the passage of the ADA, we all know that if you are an individual with a significant disability and you will need or are on federal benefits, SSI, SSDI, particularly SSI and Medicaid, there are benefits caps that put you in a state of chronic financial instability. So pursuing and achieving economic self-sufficiency simply isn't possible. We also know that the federal benefit system disincentivizes work. ABLE changes that somewhat, because you can put assets in a place that will not threaten your federal benefits. You can earn money and put it in an ABLE account. And as many of you know on this call, special needs trusts exist. Special needs trusts are another pathway to financial security, but they're not a pathway to financial independence for people with disabilities. And additionally, they cost money to set up and keep and maintain, far more than having an ABLE account. So you had to have means to have any kind of a pathway to greater financial independence until ABLE came along. Next slide. So in a nutshell, There are several reasons why people from all around the country, but particularly in Illinois, are opening Illinois ABLE accounts. We talked about preserving those federal benefits. The one federal benefit that does interplay with the ABLE account is SSI, Supplemental Security Income. If you are on SSI, when I use the word you, by saying you, I'm referring to the account owner. So if you are receiving SSI benefits, you can save up to $100,000 in your ABLE account and your benefits are preserved. That $2,000 asset cap that people spend a lot of time trying to stay below by sometimes spending money that in ways that they don't need to spend simply because they've got to keep below that $2,000, it goes away as long as your assets above $2,000 are put into an ABLE account. When you get to $100,000 in your ABLE account, at that time, if you are on SSI, your benefits will temporarily be suspended until your balance in your ABLE account goes below $100,000, and then your benefits will resume. Able to Work is legislation that was passed in 2017. It allows for people to save more each year, contribute more each year in their ABLE account, their Illinois ABLE account. We'll talk a little bit more about that shortly. You can deposit, contributions can come in from any source: gifts, small inheritances, small settlements. Special needs trust can be set up to automatically transfer funds into an ABLE account. So there, I said gifts, earnings, I think earnings, paychecks from the individual who's working, but also as a parent, I could have funds automatically direct deposited from my paycheck into my ABLE account if I so choose. Unlike Social Security, there's no Medicaid asset cap, so it doesn't matter how high the balance in your account, your ABLE account gets, you will not see your Medicaid benefits suspended. As I mentioned earlier, ABLE accounts are, they're an alternative. They can be a partner to or an add-on to special needs trusts. And the earnings on your ABLE account are tax-free. The withdrawals on the account are tax-free, as long as they're used for qualified disability expenses. We're going to talk about that shortly. As of 2017, one can now roll over from a 529 college savings account into an ABLE account without any penalty or taxes. ABLE offers, our Illinois ABLE account offers easy investment checking options. We'll talk a little bit about that. And finally, one of the real big boosts for Illinois taxpayers is that if you are an Illinois taxpayer and you contribute funds into an Illinois ABLE account, any Illinois ABLE account, you can deduct $10,000 or $20,000 individual or filing jointly from your Illinois state income taxes. So for those of you on this call who may already have an account, the contributions between now and the end of December will be able to be deducted from your state income tax if you're an Illinois taxpayer. Finally, the person with the disability always owns the account. There are others who can open and control the account for the person with the disability, but the person with the disability always owns the account. It's not in the name of a trustee or another owner. Next slide. Okay, eligibility is pretty straightforward. The onset of the eligibility before you turn age 26. Do you have to have the diagnosis before 26? No, although most people do. But your onset of disability and any records you have that you would keep need to have a history of the onset being prior to 26, even if your diagnosis was after. So an example of that might be, typically autism is diagnosed before 26, Down syndrome, other congenital disorders that come with birth or early in life. There are other areas such as mental illness, mental health disability, where the onset may have been well prior to 26, but the diagnosis might not have been made until after. And that's where record keeping, social histories, and the physician's letter come in handy. The second criteria is you have to have a level of disability that qualifies you to receive Social Security Disability Benefits, SSI and SSDI. You don't have to be receiving them, but you just have to meet that standard that is put out by the Social Security Administration. And if you're not receiving benefits because the individual, the account owner is a child and isn't eligible yet for benefits, or if you're an adult and you meet the first two criteria, but you are not receiving benefits, you just need to have a letter from a licensed physician that you keep in your files that indicates onset prior to 26 and the level of disability would qualify you for benefits. Next slide. I think it's great for this audience to know, because we're a big state, both in terms of population and geographic area. There are about 250,000 Illinoisans with disabilities who are eligible to open and own ABLE accounts. Those who currently own accounts in Illinois, to give you a bit of a breakdown, 71% plus have a developmental disability, which includes intellectual disability. We've got a pretty even split, and I think we'll see that begin to go up as more and more service providers help play a role in their the individuals that they serve, who sometimes tend to be older. As we see that happening more and more, and if we have time, I'll talk a little bit about the role that service providers are beginning to play in this, in the opening and management of ABLE accounts. But currently, we get about 65% are under age 36, and about 35% are over age 36 account owners. And the vast majority are either receiving, eligible to receive, or they've signed, they have the signed letter from a physician. Next slide. Easy to set up. We'll talk about that in a minute. Next slide. Okay, this is a place where folks often get a little bit confused about, well, who owns it, who runs it, who manages it, who doesn't. The account owner, as I mentioned, is always the person with the disability. Unlike, if any of you are familiar with 529 college savings, there can be multiple 529 college savings accounts for one person. I can have an account, my ex-husband can have an account, my mother can have an account in 529, and the beneficiary of all three of those accounts could be my son or my child. Not true with Illinois ABLE. There can only be one account nationwide in one account owner's name, and that account owner is always the person with the disability. So then, if you are an account owner, opening and manage the account is the next question. Okay, well, I'm the account owner. Who opens and who manages the account? Well, if I'm not under guardianship and I'm an adult, I can open it and manage it for myself. If I am a minor and my parent or my guardian would have to open the account for me because I'm a minor. If I'm an adult and I am under guardianship, it has to be a guardian who would open the account for me. Or if I'm an adult and I am not under guardianship, but I'm not comfortable opening and managing it myself, I can grant power of attorney to someone else to help me with that account. Finally, if I'm an adult who is in Illinois, if I'm an adult with a disability, my parent can also, without guardianship papers, open an account on my behalf. That's just some expanded legislation that we made available to folks who have guardianship of the person, but not necessarily of the estate, and who need to be able to open and manage the account for their adults. I should also add that if you are a guardian of the person, you're an adult, you're a guardian of the person of an adult with a disability, you can open an account for that person. Lastly, a representative payee. We've had a lot of questions about this. Can a representative organizational or an individual open an account for an account owner? The answer is currently you have to be playing one of these other roles that are listed above. However, I should tell you that last week, the Department of the Treasury, remember the IRS world, came out with its final rules about ABLE accounts and has indicated that there is a much more expanded hierarchy that is going to be allowed to open and manage accounts. including grandparents, siblings, and representative payees. However, that literally just came out last week. It's probably going to be a year or so, maybe longer, before that is in play. So I'm going to stop there and see, Lauren and Chelsea, does anybody have a question about this? Who can open it? Who can manage it? How that works? Okay.
I don't see any questions in the chat box, so
Okay.
I'm going to assume that's a no.
Good. Then I know everybody's an expert. And you get ready for the quiz that's coming up in a little bit. Next slide. Okay. Fundamentals. $15,000 total can be contributed to the account each year, each calendar year. If you work, you being the person with the disability account owner, more can be contributed to your account. That more is either all that you earned, that same amount, or the federal poverty limit. This year, that federal poverty limit is $12,490. So if you earned $12,000, you can put all $12,000. You can put $12,000 extra into your ABLE account. It's just matching that number, if that makes sense. They mentioned one account per individual nationwide. No matter where you have an account, you can only have one. Illinois is open to any individual, any account owner. You can live in any state and have an Illinois ABLE account. It's always recommended that people look at their own state's plan first. This total size of the account can grow to $450,000. And people sometimes say, well, wait a minute, I thought you said $100,000. $100,000 is just that cap. It's just that number you have to be aware of if you're on SSI benefits and you don't want them suspended. But your account can grow up to $450,000. And there are no withdrawal limits. You don't have to get permission to take withdrawals. You don't have to send receipts or evidence of what you have spent the money on your account. It's your account to use. But do keep in mind, you do want to hang on to your receipts in case you are audited by the IRS. So different from the Social Security Administration, where there are audits and you have to report how the money was spent year after year. With an ABLE account, you don't have to do that, but you do want to hang on to your records and receipts in case the IRS decides to audit you. Next slide. Okay, as I mentioned, contributions can come from anywhere. Money gifts, paychecks, inheritances, distributions from a special needs trust. You can even have a fundraiser and put money into the account. And Social Security benefits can be direct deposited into your Illinois ABLE account. You can set that up to have them direct deposited into the checking account portion of the Illinois ABLE account. Next slide. Investment options. It's Thursday night. It's dinner time. I won't spend a great deal of time on this except to say there are 6 options for investing funds. They range from aggressive, which is as it stated, you take more risk on the upside, on the downside, for a potentially greater return on the upside, all the way down to conservative, where you take less risk, which gives you less return possibility on the upside, and lower risk on the downside. That's the way to think about it. These are what we call passively managed funds. Passively managed options with passively managed funds underlying them. When you invest in the aggressive, for example, 90% of your investment is geared toward equities, towards stocks, but you're not buying outright stocks. You're investing in an option that tracks and follows a basket of underlying funds that have been selected both for safety, but have a little higher risk because they've got that potential upside and the much greater downside. You can change around your investments 2 times a year. You cannot do it more than 2 times a year. So remember, if you choose the investment options, once you've made your selection, you can do that 1 more time this year, and then you need to stay where you are until the following year. That is a federal rule that we have to follow. Next slide.
JJ, that date that you
Yeah.
can change isn't a certain date. It's just only 2 times per year, right?
Two times in a calendar year, correct. So as long as you do it 2 times within 1 calendar year, you can do it on December 30th and then do it again on January 3rd if you want. And forget that I said that, I'll confuse everybody. 2 times per calendar year, sorry. Gosh, I look like I'm sitting in the dark and well, it's because it's getting dark. Okay. The 7th, what some people call the 7th investment options, but it's not an investment option, it's a checking account. And it's a liquid, low cost, very low cost liquid option that's very popular. For some people, they have everything in the checking account. For others, they've got a mix. They've got some for longer term investing. They're looking to earn more on their investment, on their assets. And then they want to have a little bit for spending day in and day out. The checking account option, yes.
We did get a question. They want to verify that if they move money out of the investment portion to the checking, does that count as an investment change?
Well, that's a great question, and thanks for asking it. The first time, if you want to set up regular movement of funds that are in the investment options into your checking account, the first time that you set that up, it will count as one of your investment option changes. But if it's set up as a regular disbursement into your checking account, it only happens that one time. And I think if you're saying, well, what if I decide to move it out from investment into the checking account and I move it out 3 or 4 times a year? You know, I want to check on that, but I don't know that you can, that would count as only the one time. So as not to confuse you, let me say that if you think you're going to want to regularly move funds from the investment option into the checking account, I would suggest setting it up one time for it to disperse that way. Otherwise, I would suggest that when you enroll in the plan, you identify a certain amount of funds to go in, or you plan to just put certain funds right into the checking account so that you don't challenge that 2-time-a-year transfer or investment lineup change. Hopefully that's helpful. The checking account option is popular. It is, I'm about to sneeze, so sorry. Comes with a free no-cost debit card, unlimited check writing. You do have to pay for the checkbooks, $6 for a checkbook of, I think, 50 or 100 checks. No overdraft fees, FDIC insured up to $250,000, and fee-free ATMs all over the place. You just want to make sure that you're using one that's in the Fifth Third, the network that Fifth Third is part of. It's a really robust and an important part of the Illinois ABLE plan. However, everyone listen on this one. Don't walk into a Fifth Third branch, because they do exist in the state of Illinois, and ask to open an ABLE account. They cannot open the ABLE account for you. You must open the account through Illinois ABLE. Don't go into a Fifth Third branch after you've opened your Illinois ABLE account and try to deposit a check into your Illinois ABLE account. They will not take it. The only thing that you can do at the bank level, at the bricks and mortar level, is go to an ATM machine and use your debit card to withdraw. Or you could write a check and to a, let's say you're paying a therapist on your Fifth Third checking account, and they can cash it. The reason for that is it's our responsibility at Illinois ABLE and the program manager to make sure that your contributions never go above that $15,000 annual maximum, because if they do, you could be jeopardizing your benefits. And so therefore, everything has to funnel through the Illinois ABLE account, except for those withdrawals from ATMs, because we'll already have accounted for that when the deposit has been made on the front end. Next slide. Deciding the investment options. 4 questions to ask. What are the qualified disability expenses that you want to save for, or that you have now that you need to manage? When will you need the money? What's your timeline? Understand what risk is, and I'm not going to talk about that here, but Lauren and Chelsea, I didn't share with you the the what type of investor PDF with you, but I would say to everybody, go onto the website and there is a whole section on what type of investor are you that asks you these questions. And finally, asking yourself, what is my risk tolerance? How well will I sleep at night if I see the market, you know, going down very quickly or going up very quickly? So those are questions to ask yourself, ask your support network, ask your financial advisor if you use one, to think about where and how you want to place the funds that you put into the Illinois ABLE account. And also, as with every kind of savings vehicle, read the plan disclosure documents. At least give them a really good read so you know what it is that you are opening when you open an Illinois ABLE or any ABLE account. Next slide. Are Illinois ABLE accounts free? They are not. There are fees associated with having an Illinois ABLE account. They are low for a very high quality program, but they exist. The first is every quarter when you have an Illinois ABLE account, if you get your statements electronically, you're going to be charged $11.25 that quarter for the privilege, I would say, or the ability to have this account and have it managed for you. If you receive it in paper, you're going to pay a little bit more. A greater amount will be deducted from your account. Additionally, on that investment side, those 6 investment options, there is what's called an asset-based fee on the portion that you have in the investment option. Those asset-based fees range from 34 to 37 basis points. What does that mean? It means that on an annual basis, this is hypothetical, if you had $1,000 in the investment portion of the account, your account will be charged somewhere in the vicinity of $3.40 to $3.70. That's a hypothetical, but it kind of gives you a sense of what those underlying asset fees are that I just mentioned. And that is for the investment option. The checking account, there's no reason to pay a fee, but there is a fee if you don't do one of the following. You either need to have $250 in average daily balance in your checking account, greater than $250 or greater, or take your statements e-delivery. So you can have $100 in the checking account, get e-delivery of your statement, and you won't be charged a monthly checking account fee. Otherwise, it's $2 a month to have the checking account option. And again, I mentioned you can purchase paper checks. Next slide. What can the funds be spent on? These are those qualified disability expenses. There's a long list on the left that was provided by the Department of the Treasury when the ABLE Act was first passed. I think the more important list is on the right. And that is because this is the messaging directly from the Department of the Treasury. Remember when I said that this is a program that falls under the IRS or the Treasury Department private savings, not the benefit system. And so when the Treasury comes out and says, this is what you should be thinking about with your expenses, the reason to pay attention to this orange part of the slide is that nobody's going to tell you what you can and can't spend your funds on. This is self-directed, self-judge. But if the IRS audits your ABLE account, you need to be able to show that your expenses, that you spent the money on qualified disability expenses, those specific things on the left. And the Treasury said, but don't worry, the Treasury, that's not an exhaustive list. Just think about expenses that maintain or improve your quality of life, increase your independence, improve your health. The Treasury Department says construe this broadly. They can include basic living expenses, and they're not limited to only those medically necessary expenses or expenses that might benefit somebody else along with yourself. You, as the person with a disability, are able to buy an accessible vehicle, and in owning that vehicle, you're driving it and dropping somebody else off. That's just a hypothetical example, by the way. I can't tell you how to spend the funds from your account, just tell you how to be thinking about it when you're deciding whether a use of the funds in your account would be considered a qualified disability expense. It's your judgment. The key is to keep your records, keep your receipts, so that if the IRS ever audits, you will be able to share and present that information, just like you would for any other IRS audit. Next slide. To open an account, you need to go to illinoisable.com or call customer service. Or when you're online, you can download a paper application. Highly recommend opening the account online. It's easier to do. It takes less time, but you can certainly do it by paper if you are more comfortable. In fact, I would say if there are service providers on this call, service providers typically, it's probably a good idea to submit submit it in paper so you've got that copy. But there's also the online option is there as well. It's real easy to do. Customer service is really, really helpful. And if you ever have questions or problems, you're certainly welcome to come back to me or our program manager, Rosemary Laudani, and we would be happy to help you out if you've got questions that can't be answered by customer service. Next slide. Okay, here's the quiz. Will I lose my benefits if I have an ABLE account? Will I lose my federal benefits? Somebody has to put the answer in the chat. Will I lose my benefits? Are people able to put answers in the chat? I should be able to do this as a poll, but I don't know how to.
Janice answered no.
Ding, 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 ding. Thanks, Janice. You are right. Oh, there's a lot of no's. You got it. Unless you go over 100,000 a year, Lisa, as long as you stand, you won't. And that I'm glad you said that because you won't lose your benefits. You won't be, what do they call? You won't become ineligible for the benefits, unlike I guess some other Social Security reasons for suspending benefits or ending your eligibility. You remain eligible. They're just temporarily suspended till you go back below that 100K. What if I work? I guess I should add to this question, can I have an ABLE account if I work? Yes or no? Yes, yes, yes. Can I save in my ABLE account more money if I work? Kind of feeding this one to you. Yes, you can contribute earnings. Yes, yes, yes. Thank you. Great job, everybody. Yes, you can. And you can contribute more than the annual $15,000 max if the person with the disability, the owner, is working. So this is a great incentive for those of us in our disability community who want to make sure that employment avenues are there and open to people with disabilities. How many accounts may I have? One, exactly. Greg just said, please elaborate on how to deposit into the account. Thanks, Greg. Multiple ways. One is you could set up automatic payroll deposits from your paycheck if you are, let's say, a parent or somebody who wants to automatically give to the account. The account owner can have a paycheck set up for automatic payroll deposits. You can send in a check. You go on to illinoisable.com and there's a form that you can complete and you can put your check in from, let's say, any bank where you want to make that contribution and it will go into the account. There is a platform called UGift onto which you can go and make a contribution online or by check into somebody's account. The only thing that you can't do is deposit cash into the account. It will not accept cash. Greg, I hope that
and also it is easy as the guardian of the account to send an email out to grandparents, aunts, and uncles. I usually do that at Christmas time because we don't need toys at this house. So just a friendly little reminder that the ABLE account's a great way to give Christmas presents. So that is something that in my family usually takes advantage of that.
That's great, Lauren. And as we approach holidays, that's a really great reminder. Janice is saying that checks have to be made out to ABLE and not to the person. My mom doesn't like that. you're saying, and I have to check on this, Janice, because I don't do the day-to-day program operations. I think what you're saying is that the check needs to be made out to Illinois Able and not to, let's say, John Doe. You sent a check. I sent a check made out to my daughter, and they sent it back.
Yeah, so maybe I can speak to this a little bit. From an investment advisor perspective, when we have a customer who wants to invest money in their account, they're typically making that check payable to the investment, whoever's holding those investments, Fidelity. So I think this is probably a similar situation. Janice, I typically write the check to Illinois Able and then put my son's name in the memo so that I make sure that it is getting credited to him.
And Janice, thank you. I'm going to contact our program manager and double check on that. And Lisa said that a money order was also not accepted. I'm going to contact the program manager because I don't know, that just seems like an added step that I want to, maybe there's a reason for it. And as the director of the program, I should know what it is, but I want to double check on it. So stay tuned on that one. Do I have to have permission to withdraw funds or send it, or do I have to send in receipts? Yes or no? No, you got it. Is an Able account free? No, you're right. There are fees, but they're low. It's a low cost and high quality program. Will Medicaid take the money from my account if I die? Thanks, Cindy, thanks, Janice. The answer is maybe. And I don't mean to be, I'm not trying to be sketchy on that or opaque. Medicaid has the authority for most of the people who currently are currently eligible to have accounts. Medicaid has the authority by federal law to recover the benefits that it paid to a person after that person dies, from anything that was, any asset that was in that person's name, except I believe a house and car. If that person had assets, which is why the special needs trust industry mushroomed, because funds could go into a special needs trust, they get hidden so that if the individual passes away, those Medicaid can't come back in and take benefits, take the money from, because there's nothing in that person's account. Person has no assets. Two things that we've done here in Illinois. First is we passed legislation that we could pass that protects Illinois Able account owners who receive Medicaid benefits in the state of Illinois from having certain kinds of recapture or recovery taken from Medicaid. But truth be told, most of the kinds of benefits that people who have Illinois Able accounts are the kinds of benefits that Medicaid still has the authority to recover. We are working currently with legislation that got a little bit sidetracked because of COVID, and have support so far in the General Assembly and even with our state Medicaid agency to prevent Medicaid from being able to recover from any of the funds that are in an Able account if and when an account owner dies. So stay tuned on that. I will remind us that these are living accounts. They're not meant to be dying accounts. And I say that in great honesty to say that these are meant to be used by a person while he or she is living. But there's no doubt that if the account balance gets up to a significant sum, you may need to, until this legislation is passed, be thinking about, you know, your entire all of your tools available to you to protect that money. So stay tuned on legislation. We'll keep you posted. I should say that currently the average balance in an Illinois Able account is about $8,500. That's a wonderful amount of money, so much higher than the $2,000 that folks used to be limited to. So if, God forbid, an individual passed away who owned an account with that money in it, the first thing that gets paid are all the outstanding disability expenses. And the second thing that gets paid is the funeral and burial expenses before Medicaid can access any of the accounts for recovery. So that's kind of a long answer, but that's where things stand. But I would just say that don't let fear of Medicaid recovery prevent you from opening and owning the account. You just want to manage it. You want to just pay attention to the size of the account over the years. Can my Social Security benefits be direct deposited into my ABLE account? Yes or no? Yes, they can. And that makes it, doesn't mean you don't have to report to Social Security just like you always do, but they can be put right into the ABLE account. Thanks everybody for answering in the chat. That was an easy way to do a poll. Next slide. Illinois is playing a leadership role for once in ABLE across the country, and I'll just point out a few ways in which we're doing that. Next slide. We lead the National ABLE Alliance. It is now made up of 18 states. We need to add in Connecticut there, which just joined the Alliance a couple of weeks ago. Ascensus is the program manager, and I always put that in here so that folks know that Illinois state government, the state of Illinois, is not touching your funds. Your assets are being managed by a private program manager. And as you saw in the investment options, the underlying funds are run by recognizable names: BlackRock, Schwab, Vanguard. Illinois, the state of Illinois never touches your money. But what we have done is lead this alliance. And the reason that's important to know is because by joining, when we were first looking at these plans, even with 250,000 eligible in our state, that's just not enough to make a market for a program manager to step up and say, you know, we'll give you a great program at a low cost. So we joined, and Illinois led the way to set up this alliance that now has 18 members in it, to get a program manager who could give us the highest quality, lowest cost by sharing efficiency, sharing the program manager, sharing the record keeping, sharing the customer service expenses. And hence, I believe we have the best best program, and therefore Illinois' plan is the best in the country. And it's very, very low cost. There's well over $100 million now nationwide in the Alliance assets alone. So I see Janice saying, good to know the state can't take your money. As you're looking at changes, it would be great to put a higher amount in for college. No kidding. We are fighting at the national level to make it possible for lump sum settlements or the full rollover of a 529 college savings account. If you've got $50,000 in the 529 account and you want to roll it into an Illinois ABLE account, you have to do that over a period of years. You can't do it all at once. Silly. Should be able to be done just like that. So we're working to make that change. So stay tuned on that one. Next slide. Another leadership role that we're playing, and Jenna, to your point, working at the federal level with Congress, directly with Congress, directly with the Social Security Administration and the Centers for Medicaid and Medicare, directly with major disability advocacy and rights organizations, directly with other state treasurers across the country in a leadership role, and finally, and most importantly, with people who have disabilities themselves, to ensure that this very young, very new program that has a lot of growing to do grows strong and really true to meeting the needs of people with disabilities. So I'm really proud. It's the one place where we in Illinois can say we're very proud of the work that we're doing and the program that we offer, and the quality of what's available. So I think that's something that we in Illinois can all be proud of. Next slide. Next slide. That's Wendy. She owns a house now because she bought her house using her ABLE saved funds. COVID, it's there, it's with us. Everything is running. No hiccups, no problems. Just want to let you all know that get online to do as much of your Illinois ABLE account management as you can, or call customer service. Next slide, because you can't go into a physical spot to do that. And this thing called Access ABLE, please sign up. Email able@illinoistreasurer.gov. Lauren, I'm very happy to say you could certainly share a PDF of this entire deck with the participants today, so they have all this information and don't have to write it down. We will get you signed up if you shoot us an email for Access Able, and that's where you'll get all these updates on legislative and rules changes and other important things that are coming down the pike. And last but not least, the most important slide. Oh, yay! Look at that cutie pie. That's Alex. Lauren, is it okay if I say that's your son, Alex? Too late.
Of course it's fine.
He is just our favorite. Next slide as we do Q&A. That's Alex again. Oh my gosh, we had so much fun. Alex is a face of Illinois Able, and we couldn't be more proud than to have him and his family and his mom be account owners and participants. So he is such a cutie. Any more questions or thoughts or comments?
There's one from Cindy Klingler Jennings. I know that funds can be transferred into the Illinois Able account from the Special Needs Trust, but can Able funds go from Able to the Special Needs Trust?
No, they cannot. Thanks. That's a great question. They cannot. Able funds are first person, first party. They're in the person's name, and it would poison the Special Needs Trust if you send them in that direction, but they can come from the trust to Able.
Okay, well, you guys can still be thinking of questions for JJ. I'm going to go ahead and start talking to you about why our family chose Able. So here's Alex. He had a shot last week. So that's a picture of Alex from last week when he was getting a shot. But some people say to me, it seems silly that you would need an Able account for Alex when he's only almost 3. And the truth is, we started saving for our other kids when they were newborns. So I don't know why we would do anything different for Alex than we did for them. However, we knew Alex had a diagnosis at birth, and we knew that it was going to be important to save safely for Alex so that it wouldn't affect future benefits that he might need, and in a way that it would allow him to maximize growth in that account. So being able to access Illinois Able for Alex is wonderful because he can invest in some mutual funds, and he's obviously in a pretty aggressive model because he has time on his side. So that's why we chose Able at a young age. And we like to think that Able is truly for our entire family. We know that someday myself and my husband won't be here to care for Alex, and that burden will be left to his big brother and his big sister. And I don't think that they would consider caring for Alex a burden, but we certainly don't want any financial burdens to be placed on them to care for him. So Illinois Able is allowing us to put money aside for Alex's future, knowing that someday down the road, he might need a supportive employment environment, or he may need to live in an environment where he has support at home. And we don't want Nora and Grant to have to worry about how they're going to pay for that. So we know that through this Illinois Able account and our ability to contribute to that today, it's really for the future. The other part of it being for the whole family, I mentioned earlier, we share the Illinois Able account ability to donate to the account with our family every year. We want my grandma and my parents to contribute to Alex's account. Alex is the baby of 3 children, and when I said we don't need toys, that is not a lie. There are a lot of toys at this house. So the best thing that they can give Alex for Christmas is a contribution to his Able account. So it truly is for our whole family. They all know about it, and they all ask about how his account is doing. And then we know this Able account is for his life. Right now, we don't have a whole lot of expenses for Alex. Alex did have a hospital stay this summer because he had tonsils and adenoids and wouldn't drink anything. So we were in the hospital for 5 days. We had a pretty big hospital bill as a result of that hospital stay. Had we not been able to pay that out of our pocket, we would have been able to use the funds that we had in Alex's Able account to help offset some of those expenses that we had. Also, right now, Alex is in early intervention. So that picture on the right is Alex playing at the playground with two of his therapists. And we actually had his exit interview or exit meeting today with early intervention. And so we know that things are changing for Alex. He will be 3 in a couple of weeks. He's going to lose his early intervention services. He's not going to qualify for the therapy at school that he needs. And so we are going to have some expenses coming out of our own pockets to provide the therapy that we know he needs to continue being ahead of his peers with a similar diagnosis. So it's really there for now. It's there for the future. It's truly there for Alex's life. And that's what we like about having an Illinois Able account for him. Chelsea, did you read those in the chat box while I was talking? I didn't see if there were any questions for us.
Yes, yep. And JJ did a great job of responding in the
chat. Perfect. So if anybody has any questions specifically for me, I'm happy to answer them. We will have our contact information. So I encourage you to reach out to me if there's ever any question you have as a parent or as a grandparent. We just really feel that this is valuable for people in the disability community. And speaking from Trust Bank, we want to make sure that you guys are able to save in a safe way so that your financial plan is really a plan for the future. Chelsea, do you have anything to add to that?
I don't think so. We'll follow up with everyone who registered so that they have contact information and a copy of the slide deck and the recording and everything. I think that's all I've got.
Okay. Well, we appreciate you guys joining us tonight. I know that time is valuable and you missed out on some time with your family. So we appreciate that. And I think that I can speak for all three of us when I say we are available. Should you have any questions, we would certainly be happy to help you any way we can. So.
Thank you. Thank you so much for having me on.
Thank you, JJ, for joining us. We'll send out the slide decks to you all and the video, and you can feel free to share that with anybody that you think would benefit from it as well. Thank you, guys.
Thank you. Have a great night.
Bye.